expect the Fed to pause at the September meeting. This has been my expectation for some time. Already back in June, they indicated that they really wanted to slow down the pace of interest rate increases. So my baseline is that we'll have no change in September, and the focus will be really on forward guidance about the economic outlook and interest rates in the coming months.
In the last quarterly forecast, Jerome Powell warned another interest rate rise before the end of the year was likely. Inflation ticked higher in August thanks to higher fuel prices. There is real resilience in the economy and bond yields are soaring. Will the Fed's hand be forced in November?
So chances for a November interest rate increase are 50-50 at the moment, in my view. So all those factors that you mentioned are very important. On the one hand, we have the resilience of the economy and the labor market. But on the other hand, we've had some progress on core inflation, and that's been coming down faster than the Fed anticipated. When it comes to headline inflation, that's largely been increasing because of volatile energy prices, and that's something that the Fed tends to look through. And really the question about November is whether the economic resilience that we've seen so far will be extended into year end and beginning of 2024. If that is the case, I do expect that the Fed will go ahead and increase interest rates again in November.
Is that likely to be the end for the Fed in this hiking cycle, or will it remain on a wait-and-see footing?
Well, I think we are very close to the end of the tightening cycle. It may well be the case that down the line we get surprised by the resilience of the economy and the Fed has to reignite the tightening cycle. But for now, I think once the Fed has increased once, maybe another after November, we should be done with increasing interest rates, and the focus will be on what does it mean to be higher for longer? How much does the Fed need to push back against market expectations of interest rate cuts in 2024?
Do you expect those interest rate cuts are going to be pushed out beyond what had been previously forecast?
That's my expectation, that there is a real risk. The summary of economic projections shows us a hawkish outlook for 2024, that the Fed now shows that three cuts for 2024 may be appropriate, where it thought that four would be appropriate back in June. So that sounds like a small difference, but when it comes to the Fed and the FOMC, which can have quite a lot of inertia in its forecasting process, this can be a pretty big signaling message.
In the past day, the OECD has warned of a significant global slowdown and forecasted 2.2% growth for the US this year and 1.3% next. Do you expect the Fed's projections will be similar?
So I expect that next year the Fed could show growth below potential, quite similar to the OECD, and then end up revising those growth forecasts higher, as it's done over the last 4 to 6 quarters. There seems to be a surprising resilience both in economic activity and the labor market that I think will extend this business cycle. So even if we do receive these projections that show a slowdown in economic activity in 2024, it's likely that that could be revised up down the line.
Is the risk of recession increasing?
Not at this point. And I think it's very important that we learn a lesson from the last 12 months where everybody was focused and obsessed almost with a recession call, and that prevented us from seeing the repricing in yields in fixed income markets. And so when I look at the US economy over the next 3 to 6 months, I don't see in the data a warning sign that a recession is imminent.